Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. On the sixth consecutive day now, the Australian dollar has struggled to clear the 68.40 level and instead now is seeing a little bit of weakness as profit taking may be emerging, and therefore the pullback looks towards a support level of 67.60 or maybe towards this level of 67.10 before rebounding, and then furthermore potentially taking out the 68.40 to push on to 69 to 70 cents as a broader call. Meanwhile, according to the Commerce Department in the US, the much anticipated Federal Reserve's preferred inflation gauge, the Personal Consumption Expenditures, or the PCE price index, increased by 0.2% in July, furthermore giving expectations for a potential interest rate cut in the US in September. However, the report was largely in line with expectations, though the PCE price index rose at a slower annual rate than anticipated. Global markets are confidently pricing in a 25 base point rate cut by the Federal Reserve at its September meeting, but still open to the possibility of a larger cut of 50 basis points. Looking ahead to this week, investors now turn to the US jobs report, the non-farm payrolls due out this Friday, for clues on the Fed's next move. Forecasts expected 164,000 jobs to be added in August, up from 114,000 in July. Turning to the euro, the market is now fallen for the third consecutive day as the US dollar index, which measures the greenback strength against a basket of 6 major currencies, and weighted to the euro at 57.6, rebounded and extended to 101.70. And with the euro now pressuring the support level of 110.45, the bulls do need to respond, otherwise we could see an extension down towards 109.75.85 and reassess from this level. Traders should continue to monitor signals and adjust their risk management strategies accordingly, just in case the event of a break of 110.45, as we are pressuring it. But if we do see a bounce, then the market looks back towards that top side level around 110.75 and on to 112, where it previously was last week. Strong rally on Friday for dollar yen and now confirms the technicals to a somewhat positive bias. Nevertheless, the market needs to clear 147 figure 20 to ignite the rally on and trigger stop losses to 149 to 150 and reassess from there. But I do feel the dollar is likely to take a further tumble and look towards that 99.5 level, even though the rebound has extended to 101.70. But overall, I am bearish to the US dollar, so therefore we should see these gains eventually given up. Turning to the British pound, the market has extended its sell-off for the third consecutive day and now looking towards a level of 131.0510. I do like to see a little bit more to the bullish side from that level, otherwise we could be looking down towards 130.5 and reassess from there. But as mentioned, if we do see a bounce off 131.0510, then we are looking for a further gain and take out the previous high and look on towards the region of 133. But we can start for commodities as it breaks this short-term trend and now poses a further threat to the downside as it challenges 2,488.94. Now a break there would give further scope to the downside, so still continue to monitor technical signals and adjust your risk management in case we see a fall towards 2,474 to 76, and with a support level now seen at 2,458 to 62. But if we do see a response from 2,488, then we look back towards the top side with two key levels of 2,517 to 19 and 2,530 to 32 likely to be a tough challenge. Wrapping up with oil, with the bounce quickly fizzled out on Friday, and the market is now looking back towards its base, seen at 71.60 to 72.5. If we do see a break there, that would give further concerns to the downside and look towards the region of 68.60 to 69.40. But like previously seen, so let's not get too negative at the bottom side of the range, that is around 71.60 in case we get a bounce and look back towards 76.60 to 77 to $78 a barrel. Well, that's a wrap. Thank you for joining me. And as always, look out for the interest rate report and hope you enjoy the great start to the new week.